Welcome to Sunstar Spotlight. This is your host, Jake Oxley, and with me today is Sandra Powers Murphy, CEO of Noble Arc Ventures, a marketing consulting firm, and author of The Road to AUM, Driving Assets Under Management Through Effective Marketing and Sales. How are you doing today, Sandra?
Good. How are you, Jake?
I'm good. Could you give us a little bit about your background?
Sure. Well, I've been in the investment management business for 26 years, focused on investor education and marketing. It's always been my passion. I started my first firm in 2007, dedicated to marketing, consulting, and distribution, and serve as the president of the Third Party Marketing Association as well. Really believing that investment managers, not asset gatherers, is what the market needs more of, and so that's what we're focused on.
So I understand you have two companies then, Arc Global and Noble Arc Ventures. How do those two differ?
Sure. Well, Arc Global is an outsourced strategic marketing, consulting, and distribution partner to a limited number of niche investment management firms. That is a registered broker-dealer. It's also an investment advisor, and we are MSRB registered and regulated. So we do all of the distribution activity at Arc Global. But today I'm talking to you on behalf of Noble Arc Ventures, which is solely an education and consulting company. We don't provide any distribution, and we don't provide any regulatory-related advice. Noble Arc Ventures also published the book that I recently released, The Road to AUM.
That's awesome. Speaking of The Road to AUM, could you tell me a little bit about the book, like who it's ideally meant for, and so forth?
Sure. Well, any investment management firm, marketing, or sales professional will benefit from The Road to AUM. The whole point of the book was to get the perspective of the buyer. So I went out and spoke with 30 plus institutional research people who every day are screening managers to understand what they like, what they don't like, what's helpful, factors related to timing. And what this book does, it tells investment managers what the market won't. It tells them what it is that they're missing, and it quite literally gives you a roadmap to be able to come up with the right game plan. It's probably the cheapest marketing around in terms of coming up with a framework for which to build out an efficient plan.
So what inspired you to write this book?
You know, every single week, Jake, for the past 10 years, we get asked, our performance is excellent, we're a great investment manager, why can't we raise more assets? It's the number one question, and why I named the book The Road to AUM. And it really does answer that question, because so many managers think that performance alone, often looked at in a vacuum, is the basis. They're very insular. And what managers would benefit, and sales and marketing teams will benefit from, is understanding all of the factors that investors are taking into account when making an investment decision, which is much broader than any performance period alone.
According to recent Morningstar asset flow reports, actively managed funds have been experiencing consistent outflows. How can asset managers still attract assets in a sea of declining dollars?
Jake, that's a great question. There's lots of factors at work that are impacting the flows in and out of the market. Not only have we just been through an exceptional passive market over the past 10 years, but there's been huge fee pressure on managers. There's also been a lot of platform rationalization, with platforms deciding they don't need as many share classes, they don't need as many managers, and as a result, it is very difficult for managers to get traction, particularly newer managers. And one of the things we think it's most important for managers to think about is really being tactical. Instead of trying to throw everything at the wall, to really step back, determine the best attributes of the offering and where it fits in a portfolio, and then identifying the best channels or platforms and really staying focused on that, as opposed to spreading yourself too thin. We find that when managers do that and they are very clear about their plan and their purpose, they're most effective.
That makes a lot of sense. And you said that performance alone is not enough to get a manager hired. What else would institutional investors be looking for?
That's a great question. So performance obviously is critical. If you don't have good performance over a long enough period of time, including market cycles, it's difficult for investors to select you over other managers. However, there's a number of other factors that are really important. One is competitive terms. Is your price point right? Are the share classes correct? Are your minimums competitive? The second is a clear value proposition. What is it that you do and that you do differently than other investment managers in the market or passive solutions in the market? And the third is consistent content and communications. because once you determine that you've got the right offering and you're sure what your value proposition is and where it fits in a portfolio, you have to consistently and continuously tell that story in the market. And managers often want to rest on the heels of, well, we've got great numbers. If we build it, they will come. But unfortunately, the market doesn't work that way. You always have to be pushing out your story in a positive way to the right audience to be successful.
So of those three factors, is there one that you might see asset managers struggling the most in?
You know, ironically, we could talk about the consistency of communications, because often managers will do a decent job with a fact sheet and a pitch book, but they won't engage things like PR. They won't engage things like more structured marketing. They won't produce enough content to tell their story. So what institutions in particular are looking for is to understand what is the thinking of that manager. They can't tell what you're thinking by your numbers. They can tell what you're thinking when you're talking about things you're passionate about, whether it be a sector, an industry, a security, a trend in the market, anything that helps demonstrate what you do and do differently. However, in answer to your question, I actually think the number one thing managers need to do better is to think about whether their offering is truly competitive in the space they want to be in. So oftentimes managers will compare their performance to a much bigger manager, but they're going in at a much higher fee point than other newer entries in the market. And they don't have the AUM to offset that, or they don't have the track record to offset that. So really looking at the competitive nature of the market, we suggest managers look at least 10 competitors in their space and create a matrix that they run as often as daily to just keep the sales team updated on how AUM is changing, what the fee levels are, what the performance is looking like, so that they can get a better sense what share classes are being offered, what platforms these strategies are available on. That is what can keep you much more aware of the competition, better able to position yourself, and more likely to win assets.
All right. Are there any other tips that you might give to asset managers who are looking to attract more institutional investors?
It may be counterintuitive because this is the road to AUM.
Right.
That's what the book's about. But we think managers often should take that first step back. And what the book does is it really gives a game plan blueprint so managers can take a step back and make sure the team's on the same page. Often what we find is the portfolio manager has one view, but the sales and marketing team has a slightly different view. Senior management may have yet another view. So getting everyone on the same page, aware of the strategy's strengths and its challenges, and positioned accordingly in terms of what channels and where they're going to be marketed, and then consistently applying that strategy, committing to it for a good 2 to 3 years, not for 6 months, but for a good 2 to 3 years. That's what we find makes the most successful outcomes.
What is the one step you suggest all managers take at this time, regardless of where they are in the process and how much success they have to date?
Well, in addition to reading the book, I would say memorialize the game plan, because it's one thing to talk about it amongst your team. It is very different when teams put on paper what their commitment is, exactly what the dollars and resources are going to be applied to each stage. And the book actually has matrices that managers can use to lay out what it is they need to be doing. And if you put that on the bulletin board in the office, on the whiteboard, in print, and you're checking in with that game plan every quarter over a 2-year period, you're much more likely to be successful. Otherwise, what happens is you try a few things, you get a few months in, you're not confident in the results, you make some changes. So having that formalized game plan in writing that the entire team signs off on is the number one thing we would suggest to make sure managers have the right offering, they're going to the right channels, and they have the right level of resources and commitment to get the job done.
So it sounds like it's really a working book, at least alongside with the asset managers using it.
Absolutely.
What do you think is the biggest misconception investment managers have when marketing their product?
Well, probably that their product is different. I mean, what's wonderful about managers is that they're passionate, that they believe that what they do is really unique and different and value add. And it is, but it's often not different enough to overcome other obstacles, whether it be time in market, AUM, fees charged, minimums, or even performance over certain periods. So managers who believe that they are different have to do a great job articulating that difference and then over time building a case for that through good communications and content.
And if anybody's interested in finding out more about you ARC Global or Noble Arc Ventures or the book, The Road to AUM, where should they look?
Sure, great question, Jake. So noblearcventures.com will provide access to all of those things. The book is available at Amazon, Barnes & Noble. It's available at Audible, ebook, Kindle. So if you don't want to read it, certainly pick up and listen to it on Audible. But what is nice is there's a series, again, of exercises that teams can do together to really make sure they have a game plan that's going to be effective and efficient. Marketing doesn't have to cost too much. It can be done very efficiently and better with the right resources, and making sure that your marketing plan, your PR plan, that all of these different components are really the most effective they can be from day one.
Thank you. That was Sandra Powers Murphy, CEO of Noble Arc Ventures and author of The Road to AUM, Driving Assets Under Management Through Effective Marketing and Sales. Thanks, Sandra.
Thanks, Jake.